Hey guys, it's Dan here. In this week's episode we will talk about 6 smart ways to raise capital for a startup. So this video is for everybody who maybe has a prototype or made their first sales, something like that, and is now trying to scale up a little bit and to grow organically. So now that you know for whom it is, ladies and gentlemen, let's get started. Before we talk about the 6 smart ways how you can raise capital, I would like to tell you the 2 things you should definitely avoid, especially when you're just getting started with your startup or when you're at the prototype phase or at the very early startup phase. First of all, debt. Debt, you should definitely avoid debt at the beginning. Why? Because debt is a sure thing. Once you have debt, you have to pay it back to a bank or to some kind of credit institution. And second of all, as you can see, that doesn't mix up with your startup income, because your startup income, your sales are for sure risky. The outcome of a startup is, well, very shaky, let's put it like this. So you don't want to mix up a sure thing, which is that, with a very unsure, risky thing, which is you starting a business. That's the first thing. Second of all, sometimes you see people saying, yeah, you should ask your family for money and these kinds of things. I would definitely avoid asking your family for money. Maybe if it's $200, ask somebody, and if it's $200, nobody cares. But let's say if you need $5,000 or $10,000 and you are maybe a middle class or a low income family or these kind of things, that can really break a family, especially if you're losing all the money. So stay away, in my opinion, from debt and family to raise money. So now that you know the 2 things you should definitely avoid, let's talk about the 6 smart ways how you should raise capital, especially at the beginning. First smart way to raise capital is grants. So what kind of grants can you find? Well, of course there are public grants and private grants. The public grants are pretty interesting, especially when it comes to all kind of social and environmental questions, because there's a lot of demand from the government side who wants to be greener and these kind of things. So if you have some kind of idea, check out all the government, state and city grants. Otherwise, also check out all the private organizations such as ONGs and all these kind of types of organizations, because you will be surprised how easily maybe you can get free money if the idea you have or the product you have solves a problem related to like a country or city problem. I wanted to give you a pro and con on each of them. So for grants, the great thing is there is no equity or debt involved. As I mentioned earlier, debt is definitely toxic at the beginning, so you want to avoid it at all costs at the beginning. But if you can keep your equity at the beginning, so keeping your capital for yourself, keep the 100% of your business at the beginning, that's great, because that's where you're gonna lose the most, because at the beginning your company is not very valuable, right? So make sure at the beginning, if you can avoid trading equity or debt, that's a great thing. Second of all, these grants, as I just mentioned earlier, especially the public grants, are great if you have some kind of environmental or social solving product, something like that. So this is definitely 2 big pluses. On the negative side, well, each time you deal with governments and private institutions, it's very regulated, so there's gonna be a lot of paperwork involved, right? So make sure, but in my opinion, it's definitely worth it, because again, it's free money, right? And then the second negative aspect is definitely, it's especially for specific products, right? If you don't have some specific clean products, it's gonna be a little bit complicated. Even if, for example, cannabis is legal in your state or in your country, it's gonna be complicated to get a grant, maybe from taxpayers' money, you know what I mean? The second way to raise capital the smart way is using funding contests. What is a funding contest? Usually it's organized by a big company. For example, Amazon organizes an AWS funding contest, which is the Amazon Web Cloud division, but a lot of big companies do it, and the idea is actually they're gonna select the best ideas, the best services, which gonna be granted, and they're gonna win a prize, which is usually money. What is very interesting here again with the funding contest you don't give away debt and you don't give away equity, which is super important at the beginning. Second of all, a funding contest is a great way to test your product, to get some feedback, and also to compete against other products and services. So it gives you an idea: do I want to do it? Do I like what I do? And how do I compete? Can I improve how I can compete? Can my product improve? And these kind of things. Third big thing is that you can get discovered. Usually when there are funding contests, a lot of companies, maybe customers, watch it. That's why big companies usually organize these types of events, so we can get discovered by investors and potential customers as well. On the negative side, well, it's a tough competition, right? You try to get free money, and everybody wants free publicity and free money. So it's tough competition, especially also outside your field. Let's imagine it's a very broad competition where there are a lot of tech products, cleaning stuff, and so on and so on. Check out the competition guidelines, because if there is only one spot that can win, maybe you are competing against all types of product and not only products inside a specific category. So it's very competitive, but it's a great way, well, to train yourself for the future if that's what you want to do. The way to raise money the smart way is crowdfunding. So the big players in the game, for example, are Kickstarter, Indiegogo, and GoFundMe. The two first are especially for companies. The last one, GoFundMe, is more like for individuals who do not have a company yet. But the most important you have to understand about crowdfunding is there are a lot of different platforms I'm showing you right now. So depending on your current situation, try different ones and pick the one which is the right for you. So now, and to tell you, crowdfunding is a pretty big thing, because actually 34 billion have been raised worldwide, well, in the last 10 years or so. So it's a pretty big way of funding capital. So how does crowdfunding work now? Well, actually, first of all, you have some kind of idea, otherwise you would not watch this video. Then you create your project on your favorite crowdfunding platform, and by creating your project, you also tell how much you need, let's say $10,000 in 60 days, and this is the reward, or this is the perk I'm offering you. To give you an example, let's say if you want to build some kind of new product, you could say, well, in 60 days you will be able to get a free sample or something like that. Then of course you tell your crowd, and then depending on how your crowd reacts, imagine you have a great product, then your crowd pledges cash in return for rewards. So basically they will exchange money against your reward you are proposing. At some point, if it was great, the crowd shares the project with friends, and at the end of the day, or at the end of the 60 days in this case, for example, if you hit your target, well, your idea can turn into reality because you will be able to get the cash. Now that you know how it works, let's look at the pros and cons. First of all, again, this is a great way because it's debt and equity free. You don't give anything away besides the reward, which can be a product or product sample or these kind of things. This is also a great way to test your product and to get some feedback, which is essential, especially at the beginning of a launch of a product or these kind of things. You want to get rid of the stupid errors at the beginning, right? Then of course it's a lot of free publicity, because as you can imagine, a website like Indiegogo gets a lot of traffic. So if you already have some kind of crowd and if they're interested in your product, well, that's kind of your first fan base, right? So this is super important. And also these platforms make the entire process simple and transparent. So once you hit your target, don't worry, you will get your money. It's not going to be gone because it's a fake platform or something like that. Then on the negative side, well, it's for smaller projects only. Of course, if you want to design a spaceship to go to the moon, crowdfunding is not for you. And also, what I found out is actually it's better for physical products than for services, right? So if you have a physical product that is not crazy expensive to finance, then that's probably a good way to go. And also you have to find some kind of rewards, and this is why products are probably better than services for this kind of way to finance capital. So once you have your reward and once you know how it works, this is definitely a great way to go. Way number 4 to raise some capital is offering pre-sales. What do I mean by that? Well, if you already have a website, if you already have a product, if you already have some kind of customer base, well, then you can offer some pre-sales. And for example, you could say, usually my product is $100 or it will be $100, but you can get 30% off if you pre-order until blah blah blah. This is how it would work actually. And the great way by doing this is actually it's completely free, because you're already at that level where you have some kind of product and where you are testing your distribution channels and all these kind of things. So actually pre-sales are great because they allow you, well, to, let's say, imagine you produce 100 goods, you are able to sell them at a discounted price, and with the money you have received you can start producing bigger quantities actually. A great way is actually, look at Tesla for example. They made their stage advertisement, a lot of people pre-ordered at the beginning, and with the money from the start they were able to build the ramp up and to build more and more cars. That's an extreme example, but you can do it on a very small scale, of course. The great way with offering pre-sale, of course, there is no debt or equity involved, so you're not trading anything away from your business. Which is also great is that you can again test and get feedback from usually your loyal customers. Your loyal customers already know you, they will probably pre-order at a discounted price because they like your stuff and maybe they want to help you in your business. So and their feedback will be very helpful, because if your loyal customers tell you, well, this was great and this was not so great, you can adapt to conquer future markets in the best possible and strongest position. And then of course it's kind of a free teaser publicity, because think about it, once you have a website and you already have some kind of customers, once they see that something new is coming up, maybe they will not buy it today because they're not loyal enough, or then they don't know exactly, but they will definitely look at the reviews and they will already have it in mind, okay, this guy or this company brings something new out, let's check it out maybe in a month or something and maybe buy it. So it's definitely kind of a ramp up sale strategy, pretty good. And then one probably negative thing I see about offering pre-sales is you need to have some kind of customer base. Either some loyal first-time customers you already had in the past that are turning into loyal customers, or maybe your crowdfunding customers who bought your products or are waiting for kind of a reward. They are kind of your first clients, and maybe they are willing to buy. So, but in my opinion, for this pre-sale strategy, you definitely need some kind of existing customer base. The way to raise capital the smart way is with equity crowdfunding. So now you're thinking, but hold on, we had crowdfunding already, but it's not the same crowdfunding. Equity crowdfunding is a special form of crowdfunding. Let me explain you the difference. In equity crowdfunding, you are pitching to online investors who want to have a part of your business. That's the big difference. What we talked about before was the regular crowdfunding. This is where you are actually trading cash against some kind of reward, a sample of your product or something like that. Now, equity crowdfunding, as you can see, contains the word equity, which means that you are pitching investors and they want a part of your business. That's the big difference. So that's usually for more advanced, already bigger startups, or if you need more money, for example. So to give you two examples, you have AngelList and Circle Up, which are the two biggest, most established platforms for equity crowdfunding. So check them out and see what they offer. They offer some different kind of deals sometimes, so check them all out in general, because they are not all the same, right? But to keep it very simple, I wanted to again show you the pros and cons. What are the big pros here for equity crowdfunding? Well, first of all, it's you are keeping your voting rights. As I just mentioned earlier, you are giving away a portion of your equity because it's equity crowdfunding, right? So maybe after the equity crowdfunding, you do not own 100% of your business, but maybe 80 or 50 or something like that, depending on the deal, right? But you still keep your voting rights. In other words, the investors who come in, they are only in for the money. They are not in to manage your company or to tell you how to manage your company. Then the good thing here is you fix the terms. So it's not like they're gonna tell you, no, your proposition is bad, we want this. So because you are fixing the terms, of course they have to be realistic, but you are still in the driver's seat. And then of course, as it happens on a regulated platform, it's a very streamlined process and not many things can go wrong besides you making a wrong deal. But I mean, all the payment and all these things and all the regular law stuff is taken care for you. And then of course, what is interesting here as well, investors become fans and advocates for your business actually, because they are now part of ownership of your business. And of course they want you to succeed, because if you succeed, they succeed. So you will have a pretty good fan base here. And maybe influential depending on the type of investor you pick. Negative side, as I just mentioned earlier, that you are trading equity for cash, so you no longer have 100% of your business because, well, you are trading equity for cash. And here the bad thing is more like when you look at what's going on in the future, because the thing is here on an equity crowd platform, there will be a lot of investors and they will all have some kinds of limits how much they are able to invest. So the thing is, imagine if you're picking 100 investors for 50% of your equity or something, you will have 100 investors. So maybe you have to deal with all of them. It's gonna be a bit challenging, right? But especially when you look at the future, imagine you are growing. It's gonna be more complicated if to raise capital in the future if you already have 100 investors, you know. Number 6 on the list to get some capital is angel investor. That's kind of the classic way to do it. What is an angel investor? Actually, you have different kinds of investors depending on the stage of your company. Let's say if you are already a big startup, it's going to be a venture capitalist with a lot of money. But especially if you are at the beginning, you already have some sales and it's already going, but you need a lot of money to grow, then you probably need an angel investor. And here really everything is possible, meaning you are not the only person who decides what the deal looks like. Obviously you can say yes or no, but there's going to be a lot of bargaining. Think about Shark Tank, for example. That's going to be this kind of angel investor style. And here, of course, well, you are trading, depending on the deal, you will probably trade equity, maybe debt, depends on you, and definitely also voting rights, because nobody, no angel investor, every angel investor wants to have a say in your company, right? So here, what are the advantages? First of all, of course, it's it's great for bigger sums, right? If you have a very big project where you need a lot of money, that's definitely the way to go, right? And then, of course, what is interesting here, if you pick carefully, you're gonna benefit from the investor's network and knowledge. If you have a very good angel investor, he will connect you, or he or she will connect you to some influential people, maybe distribution will be easier and these kind of things. And of course the knowledge, especially from all the failures he or she already had, it's gonna be, he or she could give you some great insights, of course. On the negative side, as I mentioned earlier, of course you are trading equity and probably voting rights and maybe even debt. So that's it really depends on the terms you are setting with the angel investor. So this is definitely the most advanced option. And here what is definitely important is usually when you do such a deal, it's probably gonna be with 1, maybe 2 investors. So the most important thing is it's kind of a hit or miss because you have to pick your investor carefully. Is it a long-term investor, short-term investor? What does he or she wants from your business? What are the expectations, and so on and so on. So this is definitely, you need a lot of reflection and a lot of pre-work to pitch someone like this, obviously. Now that you know the 6 smart ways how to raise capital, now I wanted to ask you, at what stage are you right now? Are you prototyping? Are you more advanced? Why are you raising capital? Do you want to grow exponentially, or do you want to grow organically, for example? Also, let me know which way is the best way for you. And otherwise, I wanted to tell you I post once a week every Sunday. So if you like this kind of corporate and market finance topics, make sure to subscribe. Also, make sure to like if you like that kind of stuff. It takes me 6-7 hours to produce. So that being said, enjoy your week. Stay smart. See you soon, guys. Bye bye.